Hi guys, welcome to another episode of Earnings Season. The financial show that's not very financial, right? Or it is pretty financial, but it's not very boring, hopefully. This another week we're going through our COVID series, so I'll tell you from the jump. I know a couple of people have asked me about the sound. The sound is not going to be the wonderful studio quality sound, as it hasn't been for a little bit. But this time it's because we are not in a studio. We are being socially distant still. So we're continuing the socially distant series and the COVID series, and we're talking about things that can help you during this time. So we are this week talking about just the market as usual and a couple of tools that will come up in the market, and we do have an interview. But before we jump into that, I want to just talk about where we are, because today, well, you guys are hearing this on Wednesday, so yesterday is the first day that TransJamaica listed. I should start off properly by saying hi, I'm at RT Row.
You're Randy, not at RT Row.
Thank you. That's Danhai. I'm Randy, who is at RT Row on Twitter. And this is Earnings Season, which is at Earnings_season also on Twitter.
Yep.
So you guys know what we're talking about this week, and starting off with the big one that cannot be ignored. By this point, everybody's supposed to know about this. You're hearing this now on Wednesday. TransJamaica has been now listed for a day and a half. The first day is done.
Mm-hmm.
Wow. How it stay for you, Danhai?
Well, it don't surprise me. No, it surprised me. I really thought it would trade up and then the down start. Then at least somebody push it up. Nope. Everything was below IPO price, if I remember correctly.
From the jump, right?
Let me check it.
Yeah. It's so funny. So we recorded another episode that people would not have heard as yet. And in that episode, we kind of gave predictions about what we think would happen. And I had expected like maybe by day 2 things would be iffy, or day 3. But based on what the conversation I had with Danhai and our other guests at the time, they made me rethink it and start thinking about just the actual during the day trades, and so said, so done.
Mm-hmm.
Yeah. It started the day at 1:41. What ended the day at, Danhai?
118.
Wow.
And the interesting thing, it did not trade. It didn't even trade at the highest price today was below IPO price. It's 139. So,
wow.
Yeah. So nobody traded the stock at IPO price. Nobody bought at the IPO price. Mind you, on the US side, because I often forget about the US share. So the US share, the opening price was 1 cent. So the highest it sold at today was 1 cent. And it fell, well, it still fell. So it closed today at around 1 cent. Well, the close, I'm looking at the candle, and the close on the candle is 0.0097 cent US dollars. So 9.7 cents, yeah? No. 0.97 cents. Wow.
As in down?
Yeah, it's really down. So
what's that in terms of percentages?
Oh, let me check that.
Yeah, because on the Jamaican dollar side, we're looking at it having lost a little over 16% on the Jamaican dollar side, and
on the US side, a 3% loss.
It's a 3% loss.
3% drop on the US side.
So the US side is not bleeding as heavily as the Jamaican side.
Yeah, but you know what usually happens on the US side? No real trading. So it's only 2 million shares traded on the US side. Meanwhile, on the Jamaican side, 43 million shares. So big difference.
Wow. And 43 million shares.
Yep.
Wow.
47 million, sorry. So almost 50 million shares.
Mm-hmm.
And you know, my expectation is the gets worse after that. So that is news come out and people start seeing that it fell. People will, because the announcement I was listening today was only on Twitter. So a good amount of people didn't see it. So people that will now see it from hearing the news about it falling, then I can see where bad can happen from this, where it can fall further heavily. avalanche when it's an avalanche when the selling starts on its own.
Yes. Yeah. That's a real fear. The biggest IPO ever also means the most retail investors ever. And that also means a lot of people who are not necessarily familiar with the market, a lot of people coming in, this is their very first time that they've bought a stock. And they're going to hear about it tonight, Tuesday night on the news. Oh. And they're going to hear that it closed down.
Yeah, our guest from the other episode, I'm going to call her name now, Shanice.
The top striker.
Yeah, she did some more money today. So out the gate, it was trading at 1 cent, below at $1 on the Jamaican side, obviously. It was trading at $1 and, around that smart, traded really down. So she bought in and put in an order for around 130 something. And somebody came in later in the day and bought a good amount for up to 139. So she got a 30% jump on that.
within the day, within the losing day.
Yeah. So she just set the price. She bought the $1 and said the 130 something, and it just went to a meeting. Mm-hmm. She came back out and it was sold. Wow.
I really want to make sure that people get that episode. Although that episode kind of ended up a lot longer than we wanted initially. I didn't want to drop a long episode. But wow, when you hear it, guys, maybe you'll be as impressed as I am. I hope you'll be, or even more. But big up Shanice again, top striker.
Indeed.
I remember seeing a tweet, big up Chris from Yui, who had a tweet where he was saying that at 1 o'clock he saw it at 26 million units, and I checked, and at 1 o'clock it was at 26 million units traded. But I guess there were other trades that might have had to be manually entered. Yeah. And his tweet actually says that at 12:30, at 12:30 there were only a little over 8 million units that had been traded through the day. So obviously there are big trades that always happen on day one, agreements to move.
There's somebody with an interest in getting the shares as well. They expect the shares to fall, so them say, all right, just wait until the slab happens, it's falling. And so I get a good opportunity now to buy my good volumes at this cheaper price. And it was running.
Mm-hmm. Wow. Well, either that or I always just assume that it's pre-done arrangements. Is we're going to trade this on the first day as a block trade or whatever, Not really off market, but not.
No, I don't think so, queue. Because at the end of the day, because of the fact that Shanice's shares got sold like that. You get me? So it did happen on the market. So it would actually go into the queues. It wouldn't be a block transaction. Block transaction would be inter-party. So you and me and the market don't touch it.
Oh, that's true. Sorry, I shouldn't say block. I use the term block from the old way of it being. I say block mean that it's like an agreement between two people and the brokers arrange it, however. And if you and I are in the market, if you and I have that arrangement to sell to each other and our brokers handle it, and this is my assumption, you can correct me, somebody else trading on the market is unlikely to get that volume, get any of that trade. So it crosses the market officially. And unlike a block trade, it does affect the price. But it is not something that the regular public would have gotten a taste of.
That happens, so you and I will have an agreement. Yeah, that does happen.
That does happen.
In terms of it happening in this one, maybe not the case. It can be, to be honest. But the fact that you raise the price like that, and I saw the volumes are heavy on TJH, so I'm not really sure. In my head, I figure it's somebody say, let me snipe it.
That's why I think it's just an agreement.
Agreement between two people. Why?
It happens.
Just
a lot of day one agreements for
why exactly would you say, as in, what's the motivation? Why exactly you think it's that specifically? I'm not really sure.
Because when I saw the tweet initially and I thought 26 million units, wow, that's a lot. I know that JSE has reconciled. We're seeing that it's actually 40 odd million.
Oh, I get what you're saying in that one. Okay, I get what you're saying there. Yeah. So, but those,
so I thought the jump from 8 million to 26 was huge.
It could have just been, the jump from 8 to 26 could just be a big buy. But the thing is, when the fact that JSE, so it's not, so 26 is on J Trader now, so you see?
On J Trader, I'll tell you in a second, because it has to refresh. I should say it's going to kick me out and then bring me back in. But 26 was what I saw after the day closed. But now that they've done the reconciliation and it's a couple of hours have passed, it's actually showing a lot more.
The thing is, something like that wouldn't cause that discrepancy.
Oh, it's not showing on J-Trade at all.
So me and you putting into the queue to cross each other's shares. Yeah, so to me, I'm not sure what caused that.
Mm-hmm.
The agreement thing, that would just cause a regular, normal thing. You see like what you see normally. Because it's just me putting my shares on the market and you putting your shares on the market and hoping and make them cross.
That is true. But we can talk about that another time. I do want to touch a deeper issue because I know people want to hear what happened with TransJamaica now. Because the truth is, if you're in TransJamaica, you're feeling what pretty much everybody else has been feeling in almost every other stock.
Mm-hmm.
If you've been sitting in every other stock for a while, right? So you are now taking a quick taste of the market being down. Let's say that chances are you bought the Jamaican stocks, so you're down 83% of what you're not down 83%. You are down to 83% of what you were worth in that trade yesterday.
Mm-hmm.
And the question is, what do I do? Panic, which is a fear. People panic and they start selling like crazy.
Mm-hmm.
In fact, I think that there's more panic involved in this one because even before the market opened this morning, people were trying to sell it below IPO price. The pre-open had prices below IPO.
Yeah. The pre-open, exactly. That was crazy to me.
Yeah. That's people who are really afraid.
From jump, when this opens, we're down. Yeah. So I figure a good amount of people see, whatever going on right now, they say, boy, I actually need the cash, or I want the cash because I have some fear of what's going to happen to the market, So basically hold cash right now, or what's going to happen with my job. There's a lot of uncertainty in the market right now. So people actually want their money.
Yeah.
It's funny you said that yesterday. You said it yesterday that somebody might just take the loss because the cash in my hand versus when I actually want the cash, it may be way down below what I actually wanted. That so the cash now and I lost, well, at least I have the cash.
Exactly. Somebody might make the decision to take a 20 or 30% loss right now because it's better than a 60 or 70% loss later on, right? And as you keep saying, the cash really is important. And on that note, I want to bring in our guest for today, which is a perfect point to bring him in on. And he is he is Sir Christopher Barrett. I shouldn't call him Sir because he's not a knight, but he is Christopher Barrett.
I was going to ask,
I couldn't wait to jump in when you got to that second point.
Cash be king. So this Christopher Barrett, who is founder and CEO of Sprint Financial Services. So thank you, Chris, for being here. I want people to get...
Thanks for having me, man. Appreciate it.
No problem. I really want the people to have a different idea of all the options open to them. And what people, you'll hear why he's here and a lot of the things that he is allowing the market to see now. And the market here isn't the stock market. It's literally just a financial market. I will even try and speak for him. Chris, you can just give a quick once-over of what it is that you do.
Yeah, man. Sprint Financial Services, we're an MFI, microfinance institution. What we basically do is give loans, microloans, small business loans and such. What we've been doing it now for about 9 years. It's proven to be very, very profitable, and we've been able to help a lot of people along the way. What I'm noticing throughout the years, though, the regular debt loans to the normal, the mom and pops stores, or perhaps even some of the employees, those are good and they're a mainstay in MFIs, but I realize that there's a much bigger market out there, which a lot of the other MFIs, and frankly, banks don't seem to be touching on or getting into. And that is basically factoring and invoice financing loans, which people are just not doing. I can't believe they're not. At least these banks are not doing it. Because as we well know, just about every business in Jamaica is waiting for their customers to pay them. I don't know any business out here who's not waiting on credit. Boy, they can't pay me till next week or 3 weeks or a month from now. So a lot of the companies, the small companies, are starving for cash flow. And as you know, cash flow is the heart of your business, like blood through your veins. If you don't have cash flow, you're stagnant and you can't really grow your company. So, so what we have done, and we're not reinventing the wheel here, because factoring or what they call receivables financing is not a new concept at all. It's been done in Europe and Asia and so forth for quite a while. But for some reason, and maybe one of you guys can tell me, it has not taken off here in Jamaica. So once we started to market it, probably we're like on a year and a half now, the flood of applicants that has come in for this particular service has just been ridiculous. And for obvious reasons, because everybody is waiting to get paid from their customers. So what we found is a niche where we have been able to, even in these times, the pandemic that we're in, we still have been able to service a lot of the clients because of the simple fact that it is not as though we're giving out a loan to someone who's working a 9-to-5 job, who may get laid off and then, can't pay their loan, but rather for small companies who need the cash flow now more than ever. And they're simply waiting to get paid from their customers who they've already rendered the goods or services to. So as a result of that now, because of the niche that we have, we don't just lend to anybody who is servicing any company. We lend to particular companies, especially now that are actually still doing well, like supermarkets, companies that are manufacturing like hand sanitizers, that kind of thing. And we've been doing pretty well with it. Our loan application for factoring has spiked up, probably like about 50%. And we are still getting our recovery from the folks who are paying in. Our customers that are paying the reassignment to us. So in terms of if you balance it off between stocks, and you're talking about something like a factoring. If someone's going to invest their money in stocks or in debt to a smaller company that's not a junior stock exchange or the stock exchange in Jamaica right now, you probably would fare better because it's a debt investment, so an obligation to pay. It's not an equity where you're going to lose everything if the stock market goes down. And again, what we're investing is very solid in terms of getting payment back. It's not necessarily going to fail.
I get you.
Like that.
I get you. So
it can fail, but the products and the companies that our customer who they're servicing, their products actually needed right now in the market.
I get you.
So yeah, it's pretty solid. And we're it's terrible what's happening, of course, but I think because we jumped on this particular service in the last year and a half, we've been able to strive, and we're actually increasing a little bit more in our profits, which I find amazing in terms of how we're doing with this particular pandemic. All
right, wow, there's a whole heap there to break down. Let me start off by maybe just simplifying for it, because we do have lay listeners who have no clue. Although we have done an episode where we did touch on some factoring, just so people get it. Essentially, Sprint Financial Services offers receivables financing. There's a fancy way of saying it, but essentially, if you have a business already and you have a going concern, they call it a going business. So let's say you use hand sanitizer. So if I'm selling hand sanitizers and I have a factory and I make the hand sanitizer and I sell it to, let's say, Fontana.
Right.
So Fontana buys it from me, but Fontana won't pay me now. Fontana is going to pay me in 1 month from now, but I need the money right now because I need to make some more, because as we know, the time of Corona. So with that in mind, I go, boy, Fontana need this money. Fontana say, we don't pay you for 30 days. So I go to Sprint Financial Services. Sprint Financial Services goes, no problem. How much I'm supposed to pay you?
Right.
Let's say $1 million, and Sprint Financial Services gives me, they don't give me the full million, they give me maybe 90% of the million. And so I get 90% of the money up front. I get the cash in hand, so I have to wait a month, and I can go into another thing immediately. I can go into making another batch of hand sanitizer immediately. And on the other end, Sprint Financial Services then waits the 30 days to get paid from Fontana.
Right.
And so it's safer because, one, you're working with actual established businesses already. 2, established products and receivables. And 3, your payment is more often than not coming from a registered, known business. In this case, I use Fontana as an example. So you don't doubt that Fontana is going to pay you. They're going to pay, but they're not going to pay immediately. So in other words, you standing for the time. Go ahead, Chris. Sorry, I don't want to cut you. Go ahead.
Yeah, and the beauty of it also is that it's a small business person who might have a little factory. Say he does canned ackee or something like that. He is providing that canned ackee to a big company. So it can be the small person who's getting this facility to really grow their company. And I think a lot of times what we don't look at in business, is these two words that are so important. It's called cash flow. And people overlook what that really means, Because what cash flow does, if you don't have cash flow, you're just not going to grow. So what the cash flow does for a company who would have to be waiting 30 days to get paid from their customer, they can now, of course, go ahead. Yeah, there's going to be a service charge on it. Because, if we're paying 90%, there's a 10% that you're really paying on it.
Exactly.
In some cases. Dependent, right? But time is money. That 30 days, what are you losing in the value added of losing that cash that you should have had 30 days earlier? What are you losing? That 10% becomes minute after a while, Because when you now can use that money and buy more raw material, whatever the case is, buy more accurate and then maybe pay your staff. At that time, you're now creating more cash flow, you're buying more time, which then would lead to more profit. So it's a win-win for our customers. And it's also a win for our customers who's going to do the reassignment. Mm-hmm. Right? Because now they're not on this big pressure to necessarily pay the customer.
They'd have to worry about paying early.
Right. So we're just waiting the 30 to 45 days, and we're fine with that. In some cases, you might have a factor come to us, and within a week, we get paid from our customer's customer. So it all depends. So it's really, it is really a very lucrative product for everybody involved. The trifecta: me, Sprint, our customer, and the customer's customer. Yeah. It works out completely. It just keeps the blood flowing, keeps the cash flowing, and everybody's happy. So yeah, we're very happy with the product. Very, very happy with the product. And as it compares, as you said, to stocks and investing in stocks, like I said before, a lot of people, when they hear the stock market, I'm not saying you shouldn't invest in the stock market, even though it's a risky venture. Las Vegas is closed, but people are still gambling, right? So the fact of the matter is, yeah, the stock market sounds good. It's sexy, I'm investing in stocks, I'm in the junior stock exchange or so forth, so on, great. But a lot of people are passive investors. They go in there and they put their money in and they don't really know. Like I hear you two guys talking a while ago. That's basically alien to a lot of people,
It is.
The banter that you guys just had.
Trust me, we know.
We know. That's why we have the show.
Yeah.
Trust me, we know.
It's almost alien to me to a little bit. I'm not much into the stocks or what have you, but the average person and the massive of people who are now hearing about stocks and investment, people want passive income now. So what do they move to? They move to the stock exchange. They hear so much about it. So they start investing. They know nothing about what they're investing in. Nothing at all, right? They're not active investors. So it sounds good, but then they don't realize sometimes that there are other avenues out there, smaller micro businesses that actually are doing solid return and solid cash flow and solid profits, have good P&Ls, all of that. And they don't know about those companies where they can actually, though it might be a debt investment and not equity, but they're going to make good money, right? Me personally, for our company, such as with the factoring, if you think about it, if we're doing 8-10% per month on a factor, right? So 120% per annum, right? So I can literally, I can give an investor 20% per annum. It's no sweat off of our back to do that. A lot of people don't know that these kind of rates that are debt, not equity, are out there as options for them, at least where my company is concerned. And our investors are doing so well right now, and I'm just,
So that's a point that I wanted to touch on there, because this is twofold point. You're right in that one, the market is filled with a lot of people who, and even more now, because TransJamaica being the biggest, even more people are now in the market who don't know. And a lot of people got into it. And a lot of people got into TransJamaica just because they did hear about Wigton. I gave the story in another episode about a friend of mine who put $6 million in, applied, and then called and asked if I hear about it and if I know what I think about it. And this is after applying. So the money is already in. no clue what,
in already.
yeah, no clue
Also
what
for
it
the
is,
carriage.
and then they're going to call and ask. And a lot of people get that. I'm not knocking nobody for it because them hear about Weekton. A lot of people went to Weekton and made near 100% over time. Now it's almost back to IPO level, but it still made a lot of money for a lot of people. Even though I think it's at 50 something cents. I think maybe 14%. In this time, it's still great. The market gave us 30% last year. So if you made half of that, even now you're still great on it, or if you hold longer. But my point is, to agree with you there, Chris, is that yes, a lot of people are in and don't know what they're into. And so we are big on education here.
Yeah.
That's why we're big on...
Can I ask you guys a question, Randy and Danhai?
Yeah, man.
What would you recommend right now if somebody has some funds in the stock market? Are you telling them to liquidate, take your money out and just, run with it for now and don't hold? What is your recommendation? Or would you say it's just depending on each person's risk tolerance? Because based on what's happening now, and not to create panic and what have you, but when you look into all these, all I'm seeing is red arrows pointing down. I looked on the Junior Stock Exchange not long ago, right? Probably 70% are just showing losses, right? The only companies I see that are doing well are the companies you expect to do well, right? The Fontanas and so forth.
Well, not even them doing well. In terms of share price, not even them doing well. Right?
Share price. Oh,
yeah. Share price is down for the year. Yeah.
Yeah. Well, there you go. But what would you recommend to the layman coming and saying, "Listen, man, I have $1 million in the stock market. What should I do? I might be losing my job in a month." What would you recommend? Although I see on your thing, you say you don't give advice.
That's the first thing I
was going to start with that. I was going to start with that.
Yeah, I would advise.
The wrong question to ask.
No, it's the right question to ask, but it's a good question to ask. So, one, I would remind them, if they know me, they know already. I like that it's out there so people know already that I'm not a financial advisor. Neither is Danhai and this show. Nothing on this show, and neither is Chris for that matter. Unless Chris, you are and we don't know.
No, I'm not.
Yeah,
no.
So none of us are.
I'd like to think I am, but I'm not.
So none of us are financial advisors, and nothing on this show is financial advice. Having said that, though, in this situation, it is definitely up to the person, their risk tolerance, as you mentioned earlier, their personal goals. Because don't be fooled, this time is not being seen as a terrible time for everybody. People like me are very, very happy right now because this is a blessing that we never expected to get. The market is
also,
well, the market has reset itself in terms of prices. We are getting prices now that are similar to prices 3 years ago on companies that have proven 3 years of good. When you see a company like NCB, the one of the most major companies in Jamaica, definitely the biggest thing on the market, the monster in the market, and you can get it per share today at 158.84. When 3 months ago it was at 200. It's at one.
In the hopes, but you're gambling as it's going to then do good in the next 3 to 6 months.
I will step one, and this will be a long episode if we do it.
All right, so one,
we don't gamble.
We don't gamble. One, two,
I'm sorry, I interrupted you. Go ahead, Danhai. My apologies.
Two, you're looking at. So you gave a timeline. That's not necessarily everybody's timeline. So you said 3 to 6 months. Who says I'm buying NCB now for 3 to 6 months time? That could be for a year. It could be for 2 years. Everybody's time is specific to them.
Yeah, the gambling thing.
Going back to the gambling, what somebody's going in for. The gambling is assuming that they don't have an understanding or they have no idea of what's happening. So you're going for a full risk. You're just throwing blindly into the night.
Right.
If somebody understands NCB and looks at what's happening with NCB or what's going to happen with NCB, and they can pick up whatever indicator they use to figure that out, and they say, boy, NCB is worth more than 100, whatever it's trading at now, then they buy an NCB. They're going to get some of a return from that company that's more than $140 should be giving them if they can say that and get that right. So say the dividend yield goes up because NCB gets more money and the profits go up. Then you bought a $140 stock that was trading at 200 at fairly priced at 200. You got it for 140 and you're making more money in whatever time period you're looking at. Then the person is better off, right? So the dividends go up. So the price start paying more money in dividends and more money versus a lower price. It just works out better for you.
Yeah.
So it depends what you're looking at in the market.
Yeah. The reason I would say it's not gambling, Chris, is because just like Danhai said, we remove as much of the risk as we can. So we don't, like right now, I'll use myself to avoid any trouble. I don't look on NCB and go, boy, I'm gambling that it might go up to 200. I'm saying NCB bought Guardian Group not fully, 62%. In doing that, Guardian Group already owned NCB shares. So they have also now taken back more shares that won't necessarily go to the market. So they've lowered the amount of shares available in the market. And that's a more long-term factor. Two, they're branching out heavily into insurance, and they're going across the region, and they're funding a lot of the bigger players in Jamaica quietly, and they're funding heavy infrastructure players. Love or hate TransJamaican its price right now. The listing,
region-wide.
The listing was actually carried out by the NCB cap market team and the JMMB team. NCB also profits from things like that. They used to be the biggest single owner in JMMB. They sold it to Proven. And they have huge deadlines to a lot of these companies. Within the region, they just funded something huge in terms of oil. My assumption is that it's in terms of oil in Guyana. They also just finished, I think, 220 million, a huge, I think 2.2 billion Trinidadian debt raised by the Trinidadian government. And again, that was done by NCB, an NCB company. When I look on those things and I calculate the money coming from it, and I look at what the actual financials are showing, we see that in terms of just straight fundamentals, NCB is heavily undervalued right now by the market, right? I mean, it has a PE ratio of 13.97 times, and that's at the 158, and somebody got it today for lower than that because it traded at its 52-week low today. So it's not much of a bet or a gamble to say that, let us say, within a year, NCB is going to be huger. And then you can look for other signs though. Within the market, you look on the economic activity happening. As much as this thing is bad and the shelves are emptying, I only see that when there's a hurricane coming. And there was Christmas 3 months ago. So that means that there's a lot of economic activity happening, and the biggest financial player with economic activity in Jamaica is NCB. Right? We can go one more step where you can now look and say NCB, in addition to hitting consumers and handling business in the investment business side of business, as they've been doing in the international markets and with bonds and so on, they also have people inside who think that's coming. Just in terms of investing, the people inside the company will always know more than the people outside of the company, right? So the people within NCB have been quietly buying up shares over the last few weeks heavily. Now, if you're inside the company and you are buying it up heavily, that means you know something where you feel that in the future you want to own these shares and you want to get them cheap.
Sound like insider trading, man.
No, well, it's insider.
No, they can't buy it. No, because it's no longer the blackout period.
Yeah, it's done above board. And the reason why we know about it, the reason why we know about it is because it is reported. So they report it on the Jamaica Stock Exchange. So it's a known thing. So that allows us to look at it and say, wow, these guys, as much as the share price is going down, these guys aren't running away. These guys are buying. So that sort of thing gives you confidence when you're in the market. But I do know that unless you are used to it, it can be a very fearful time.
Yeah. I was reading a quote and I'm sitting here. Warren Buffett said, "We simply attempt to be fearful when others are greedy, and to be greedy only when others are fearful."
That's today's Buffett. Thank you for bringing it up naturally.
Buffett,
Today's Buffett. Thank you, sir. Thanks for your contribution to the podcast.
So that's what we talk about all the time. Buffett, and in terms of what he actually does and says versus what people think. And that is a major quote. Right now when everybody's afraid, but some of us are quietly hoarding up things, because if you had told me 2 months ago that I would be able to get NCB below $160 per share, I wouldn't have believed you. But here we are.
Well, that is no different than in 2008 with the subprime mortgage. A lot of wealthy people started to buy up all these cheap homes and all across the country. And about 3 years, those homes went up in value like quadruple, and made those people even more and more wealthy. So it's the same concept, just that you're talking about. a bank.
Stocks.
But it's it's a similar thing. Yeah, you buy when everybody is fearful. I can see that for sure.
Yeah, and the beauty of this thing.
That's why you're happy.
Yeah, exactly. Because the beauty of this thing is, a company is linked. A company's share price is linked to the company, but a company is not its share price. NCB was an amazing company 3 months ago, and it's an amazing company today. If the share price reflected that 3 months ago, if the share price dropped now, the company is still a good company.
Yeah.
Yeah. So that's the sort of thing we buy on.
Yeah.
No, I feel like I need to go out and buy some NCB shares.
We'll speak to your licensed financial advisor about that.
Yeah.
Advisor, yes, do that, sir.
I think I just did.
You did not, sir. you did not. I can't take the FSC pressure, but you did raise initially a great point in that while we are gung ho, and I say we here mean that I myself, while we are gung ho, we do take on higher levels of risk. An investor who maybe isn't as aggressive as us, there is room for different products, and what you have done through Sprint Financial Services is that you've offered one of those products to people. So you're not just offering loans to companies or receivables loans factoring to companies, but you're allowing the public to actually also invest in those loans, and you give them a return.
I am. Yeah, we are. It's called Sprint Wealth. We've been doing it now, I would say we've had investors for the last 8 years who have but not where we went and told people on social media about it or anything like that. It was more people who just knew and said, hey, can we invest some money? I said, yeah, sure. And then when we got onto this particular product and we had so much demand, I'm talking, we were getting demand weekly around there, probably like 6 million, 7 million per week in fact, people applying for it, right?
And that's since Corona or before?
No, and before Corona.
Wow.
Since Corona, honestly, Corona really has taken a foothold in the last 2 weeks, 5 days when I really, really got scared.
Yeah.
But yeah, the application has actually risen since then. I'm not saying we're actually giving out the actual cash to them, but right. So based on the fact that we've had all of this demand, we said, listen, I don't have enough cash right now to lend out to all this $6 million a week of new clients every single week coming in of $6 million or relatively that amount to lend to them or to factor them. So I said to myself, let me talk to a few people, maybe go on social media, people that I know, and let them know about that they can invest in these particular products. Company, the service is Sprint Wealth. We put it out there, and yeah, we've got tremendous feedback and have raised a decent amount of funds, and as a result of that, have been able to satisfy a couple of these new applicants. So we're very excited about it. It's just such a great thing to not just to make, we're all here to make money because we have to eat and feed our families, but to see people actually making this passive income at a decent ROI is to me, it makes me feel good to see that, right? And where it's not just at the stock exchange. I don't know, like I said, I don't have anything against that. Clearly, that's awesome, but it's nice to give people this other option, and they're so happy. Some of my folks, they can actually get their interest every month after a certain period of time when the fund have been in, and it's just been a great thing so far. And we're able to know. We want to be able to just let more people know about it. Uh-huh. We are very transparent in whatever it is an investor would want to know. Mm-hmm. Any questions that we have want to answer. Right. Yeah, of course, you have to be right. It's just been, it's been a great thing. I said to myself, why didn't I do this 3, 4, or 5 years ago? But
crowdsourcing model.
So, did you start Sprint Wealth before you had a heavy demand in the factoring?
No. Sprint Wealth literally started not very long, probably like hardly 8 months in terms of an official sense. This is Sprint Wealth and putting it out there.
And just for
at first I heard you guys on Twitter,
Sorry, just not to cut you down, but just for clarity there. Sprint Wealth is an actual product, but his company, Sprint Financial Services, has been around for longer.
Yes.
Yeah, 9 years. Mm-hmm. Yeah, but you guys have heard of party loans and recreational loans?
Yeah, man.
We started that. We were the company that initially put that out.
You guys are innovative, very smart. So, guys, on today's podcast, we have
I've gotten a lot of flack for that whole thing, so I don't know if I want to talk about it, but we had a lot of
smart business always gets good flack, bro.
Yeah, man.
Yeah, I always say that.
Yeah. What?
I always say that. I mean, I remember one time we first came out with the product. It was in the paper, and I wake up in my bed and I'm looking up at the TV, and I think TJH morning time was on, and I see these people talking about this party loan, and all of a sudden I'm like half awake.
That's the worst thing ever.
Awake, you know? Eh?
The worst.
I wasn't even fully awake, and I look on the screen and I see, I think it was Yendi Phillips talking about Sprint Financial and Christopher Barrett. I'm like, whoa, when did this happen? And then they were back, and all of a sudden I'm doing an ER interview, entertainment report, I think what it's called. I'm doing something on RJR. I'm having a paper comp and interviewing me. I was like, what is the big deal? Credit cards do similar things. Is that I'm making it more particular. I'm saying, okay, recreational.
Yep.
Mm-hmm.
And there was this whole, so. But here's a fair thing. What's funny, right now, there are a lot of MFIs who are now offering recreational loans.
Yes.
Right?
Mm-hmm.
So.
You can't beat them, you join them, you know?
Yep.
Yeah, exactly.
First they'll hate you, then they'll imitate you.
Then they're limited, exactly.
Yeah,
exactly.
I can't believe that the party loan guy on this podcast, I never know that when I started.
Do your research, man.
Hey, that's crazy. That's crazy. All right, so I was saying I first heard you guys on Twitter. Sprint Wealth I saw it on Twitter. People are talking about it as a bad thing. It's a loan company. People are just wondering what's going on. How are these guys offering investments? And so
well,
when I looked at it, in my head it was clear. It was clear what was happening. It just made sense to me because, as you were saying, you need something to fill the gap in your business. So you went for the best. Well, me and Randy love to talk about other people's money. OPM, it's the best money. You make money on their money, and you give them a good return. And everybody's.
Yeah, I've always said that nobody has money, Every strangers have your money. No money is your money because money has to flow and move for it to be money and make sense by definition of what it's there for.
Yep.
So if it's not
exactly,
OPM is a good thing because that's what everybody has anyways. OPM when you look at it.
Mm-hmm.
But you have to be innovative. We try to be innovative in our company. I don't think you can grow and expand in this market. When I say this market, I mean globally. Without being innovative. You can't be just like what everybody else is doing. Right now, we're a virtual company, meaning that all my employees work from home. So this is not new to us.
Long before COVID, long before the corona.
Long before we were working from home. Right? We had an office. We actually do have an office now. But we don't take customers in and that kind of thing. It's just for everyone on our board meeting, that kind of thing. But all our employees now working from home. It gives them, they work harder, they work longer hours, they're happier, and it cuts down also on just our expenses. Everything we do is electronical, everything we do is in the cloud. When somebody signs a contract, they literally use their finger and sign on their smartphone screen. We do our interviews sometimes via Skype or WhatsApp, which is even very rare. And I can't for the life of me see why is it that anybody's having a brick and mortar if you're in microfinance. It just doesn't. Today, I don't see why someone is going into a brick and mortar, shake somebody's hand to go and get a loan.
Yeah, and you leave out.
You
left out the wait 3 hours in the waiting room. 3 to 6 hours.
Yes.
Yeah. And to boot also, it's a little bit embarrassing. I'm going for $100,000 and the bottom I'm going for $100,000 or $50,000.
True.
I want to stay home and do my thing. And I think what is happening now, and in every dark cloud is a silver lining. This COVID thing, as bad as it is, we're going to come out on the end of it a much stronger people, not just Jamaica, but globally.
Yeah.
Right? Because at the end of the day, what you're realizing, everybody saying work from home. I can tell you, if COVID happened 15, 20 years ago, there would be no option to work from home, because the technology was not there.
Yeah, it was rare. It was rare. Yeah.
The technology was no. If you're gonna say go work from home and you were as a secretary working at a place answering phones, the big bulky phones that you'd be using back 20 years ago. You guys are now know how old you guys are, right? There's a good chance that You couldn't do that job from home. The technology wasn't there. You have WhatsApp, you have social media, Facebook, Twitter. You can communicate faster. You can now send fax. You can send a fax from your cell phone with these apps that you have.
Yes.
Right? There's a fax. You don't have to physically have a fax machine necessarily. Take a picture and it somehow does this magical thing and it looks like a fax or whatever the case is. So people are realizing, when I said every doctor has a silver lining, is because now people are saying, hey, maybe I can work from home. Maybe companies are not going to realize and say, hold on, maybe I don't have to have them come in, make them stay. Even after COVID is not a problem anymore. Say, hey, no, stay home. You know what I'm saying?
Yep.
And then maybe you don't have to pay that rent, and you're going to get more out of your people if they are working from home, if it is practical to do so. And the only thing I think that might come out of this whole thing as a silver lining, I believe, because I've been doing it now for a little while, and I look back and say, why would I have an office? This thing does not need an office. Money is now 97% of our currency out there is digital. Mm-hmm. It's all digital. Cash is what, 3%.
But what a 3%
so,
is?
What, the cash?
It's a hell of a 3% same way, man. But I'm agreeing with you completely. It's good to hear. Good to hear a CEO speaking like this, especially because you know how it goes. Because not
speak sensibly.
Yeah, it's not just the technology. 15 to 20 years. I mean, 15 years ago we had iffy technology, but what we definitely never had was a culture. Boss one is there. I will never forget. I think it was 08 or 09. I had some report to send at work. And I was sick, but not too sick. And the boss kind of doing that half-ass with them saying, if you're not dying, you need to come in because this have to do. And I'm like, well, I have a computer here at home. Let me just do it. And, they never let me do it. I ended up having to drive to the office to go. Actually did most of it from home. Went to the office, load it on with my flash drive at the time. Finished it to go back home. Just because they wanted to see you in the office. I don't understand why. It's a cultural thing that needs to break. So I think one of the the breaking of the culture is great.
If you're not seeing the person, then I'm not working. That's the idea.
Yeah, but see, that's another part.
Nobody works on their own.
That's another part of it. Danhai, is the technology part. You can't just do this willy-nilly. You have to have the technology. You have to be able to watch your employees. The software that we use now is one of the best loan softwares in the world, and that's not just because the company told me that they are. It's because just I see how they work. There's a whole Twitter feed beside it, So I see when my employees jump online, right? I see when they come off. I see what they did when they did it, what comments they left. They have to leave comments. That's just standard operating procedure. And so I know when they went in and when they came off. What the funny thing is, when they were in the office, they registered in on the feed at 9:05 and they're out at 5. No, they're registered at 7:30 and they're out at 6:30 or 7 o'clock.
Yeah.
Because they're at home.
And they're happy, they're more comfortable. Yeah.
Listen, you get up and have to commute from sometimes, and let's face it, a lot of our employees are living in faraway areas in neighborhood that you have to take 2 buses or 2 taxis to come to work. When you take out that stress, right? Not only that, you're also reducing the carbon footprint, right? And
you're reducing the amount of spend that I have to take out of my paycheck. So I get to stay home, so my paycheck lasts longer.
It's a win-win once you have a good process. You have to have the software. You have to have checks and balances. You have to have SOPs. You have to be strong with them and watch them because they will slack off. You're at home, the bed is right behind you. You can't slack off. But you have to have, yeah, man. They have to have the quotas that they have to meet.
Milestones.
And once they do these things, you'll find that the world is a happier place. In 20 years, I guarantee you. I'm sure in 15 years, about 50% of the workforce probably will not be going to a brick and mortar office. It wouldn't be warranted.
Right.
It's just not warranted.
That's true. It doesn't make sense, but it's something that we have done. And one thing where I went to culture just now, though, is because it touches back on the point that you mentioned, with you having to be innovative in business in the region, but also I'll say in Jamaica. And in Jamaica, we have a specific kind of response to innovation, and it's not to praise it. We don't praise innovation up front. Yeah, man. The very first thing when somebody sees something innovative in Jamaica is not, whoa, we're very strong in terms of our resistance to change. So I like, Danhai touched on it. I remember when I saw Sprint Wealth, because we saw it online, we saw it on Twitter. And people were asking, yo, what's this? Are these guys for real? This don't make sense. Who are these people? Blah, blah, blah. But now that I know it's the same party loans people.
All of a sudden I have credibility.
Well, you know what?
It aligns.
In my personal books.
It's funny enough, when Randy and I were speaking about it privately, when we saw it online, I sent it to Randy the same time. We were laughing and saying, this just makes sense. Because that whole OPM thing, it's something we already had discussed before, and I said, it does make sense. Take a lot of people's money, do whatever, and just run it through. Somebody gets a good return, you get a good return, everybody happy.
Yeah.
So,
long as you're giving value. Long as you're giving value.
Yeah.
Long as you're giving value.
Exactly.
Yeah.
That's it.
And you split the risk.
Yeah.
That's it.
You split the risk. I want to cut it because we have been talking about Sprint Wealth without actually saying what it's a Sprint Wealth, and I'm looking at a flyer in front of me. We'll have a link to the flyer in the show notes, guys. So if you're interested in it, and you should be interested in it, especially now where the market is dipping, you should be interested in it.
Trust
it has 3 options on it. Investment option 1 is 100,000, and it lasts for 3 months, and you get 1.5% per month. So that works out to 18% per annum, which I guess assumes that you leave it for every quarter. All right. Investment option 2 is 300,000. And there's 20.4% per annum there if you leave it. Works out again 1.7% per month. And the last one is 500,000, which is 24% per annum, which is 12 months or 2%. It's so funny to me, that last one is so funny because, well, TransJamaican people would have lost 24% today. That's all.
Wicked.
No, they'd have lost 18. They'd have lost 16%.
When I was looking at it,
But still, it is an option.
Well, look at the market. The market gave 30% last year.
Exactly, Danhai. The market for the entire year gave 30% with greater risk. True, it is with greater risk.
Yeah. So
it's equity.
Exactly, greater risk, and you have to know more. Like the amount of work you have to do versus giving Chris your money. Trust me, the difference. If you know you can't guarantee yourself 24%, and Chris is a good guy to approach.
Yeah, man.
Yeah. And it doesn't stop at that. I mean, you can go up to 2 million. As much as you want to put in is possible. I mean, we've had some people who do 2 million. Someone did 5 the other day. So it depends. But then those are longer term investments. Now you're looking to 5 years to hold for something that's when it gets to that kind of number. But I mean,
the options are there.
We're here.
Yeah. Well, you know what? Let me not make it all be a nice hunky-dory praising meeting, because I should say some of the backlash that has come online, and it's a good opportunity for you to address it. I remember when we seen it the very first time, one of the questions was, how are these guys saying Sprint Wealth Advisors, blah, blah, blah. But now I'm looking at it and realizing the product's name is Sprint Wealth. And you have advisors beside. How are they? Well, Danhai, maybe you can help guide us here. Is there a prohibition on calling people advisors?
To say wealth advisor, investment advisor, all those things are just a name. So if you're giving certain types of advice and calling yourself that, then that's where you have a problem. But if you're doing investments and not necessarily that type of investment, and that person advises you in a specific way, then you're fine. So what Chris is doing, what Sprint is doing, sorry. Yeah, it's not, it's very different. Yeah,
no. We're not advising you to say, okay, buy this stock here, buy a particular stock at this time, put this amount of money in because we estimate that the bull market is going to be doing this and the futures are going to be doing. We're not doing anything like that. We have a particular product that we say it's the fixed interest that you're going to get on your return on the investment. This is what we're putting it in. The advice stops there, The advice doesn't go any further than that. But,
They're telling you about the product.
Yeah.
Outside? I'm sorry?
They were telling you about the product, really.
Just saying, that's the advice. We're giving advice on the product. We're not giving you any other advice other than the product and what it is that we do. You could say a wealth agent if we want, but wealth advice because we're literally giving you advice. Yeah. I don't know of any regulation that says we can't call ourselves a wealth advisor. I don't know of anything like that. If there is I checked it out, then I'll cease to say that, but I didn't see an issue with it, and it's not untrue.
Yeah, the funny thing is that we touched on this in the last episode that people have heard, Danhai, that you and I care so much about the law that we are the ones who go and look it up. So as far as I know, and if I'm not an investment advisor, I am worse not a lawyer. But from the law that I read, what is actually illegal in Jamaica, which is the thing that is the one thing that I've wanted to say on that show, or the thing that's actually against the law in Jamaica is to carry on an advisory business.
Mm-hmm.
Now, if you're not doing an advisory business or carrying out the business of investment advisory, then you are not being illegal, which is why so many insurance salespeople get to call themselves that, which is why everybody who's trying to sell you some product or the other calls themselves that. But this one is very upfront with what it is. One thing we should ask though, Chris, is are these percentages guaranteed?
They are guaranteed. Well, let me not say that. I never would like to use the word guarantee because, as you know, nothing is guaranteed. I cannot say to you that guarantee in terms of, yes, this is the plan that we will be giving you, but it is definitely, I would say, 99% that we've been doing it for 8 years. We've never had an issue with not paying our investors their dividends, what they want. We've never had any issues whatsoever. I don't like the word guaranteed because there's no such thing. Nothing is guaranteed in life, whether it's a stock investment, whether you walk out of your house tomorrow. But based on our history and our performance in the last 9 years, we have always been in the black, always done well when it comes to our investors, and we've never had any issues whatsoever. But we can say as close to guaranteed as can be.
Wait, hold on. When you say you've never had any issues, you've never had bad debt?
No, in terms of our investors, we've never had any issues paying our investors getting their funds, their interests.
Wow.
What I understand is the investors themselves, they're lending your company money, and your company goes on for and does the factoring with it, and then pays them based on
that's what we do. It's a debt investment, and we pay you interest on it, and you can take your principal and interest. Yeah, you take your principal and interest back depending on the tier that you've chosen. In certain cases, if you want to get interest payments every month, we can also do that, again, depending on the option that you've chosen. So that's basically how it works. It's very simple and clear cut, which is what I like about it. There's no ambiguity
about it.
It's very straightforward.
So you're not advising people in the investing or buying or selling of securities. So you're fine. And with this thing, what just blew my mind now is to say that, okay, so if you actually take on the risk yourself. So in terms of me, the person coming to you and giving you a 300,000, my risk is almost covered because even if something goes wrong on your end, you still cover back the money and the interest.
Most definitely.
Wow.
Most definitely. I mean, and to be honest, at least I can't remember. I don't remember when it is we've ever had an issue where we've had to struggle to pay an investor or anything like that. Because remember, our margins are very high in terms of what we're paying an investor in interest. It's good for them, but also what our product actually yields. The margin that the product actually yields, especially in the factoring product. Like I said, we're paying 90 to 92% of your invoice. That's 10%, 120. So we're paying our customers maybe 24%. So we can do that. You know, when you're chopping the OPEX on top of that, it still works out to be profitable for us. So we're fine with it.
Your OPEX is
and please,
your OPEX is a little bit
I don't
because you're and that's operating exchange for anybody who do it. Operating that's an expenses. That's an exchange. Wow, sorry, JC on my mind.
Right.
But you keep it low because you keep a very clean.
We're on a tight ship.
Exactly.
Yeah, man. Listen, man, I'm not self-praising, but what we have done in terms of being a lender that is, I believe, on the cutting edge of technology in how we simply run our business, how it is we service our customers. I mean, if you call my office, you'll get the best customer service. I'm not just saying that because we do our surveys and we know this. Another thing I wanted to mention before I forget, as we talk about the receivables payment, it is not alone enough. I don't think it's alone. It is not alone. It is a service. It's a service. We're paying somebody 90 to 92% of their receivables. And then we just get the full payment back from your customer. So it's not alone. It's just a service. So on top of that, Yeah, it doesn't come under. It would not come under any future regulation because it's not a loan. By no definition, and that's something that is commonplace in terms of how it is titled. If you look even globally to the other companies that do it.
Yes. Yeah, I know.
Yeah, which is what I like. There's something about it like, yeah.
What's that?
It's something about it that I like. The way it classifies itself.
Yeah. It's pretty straightforward.
So to see something like this though being offered to people, I mean, to me, it's great, and
it's phenomenal.
I'm actually happy to see something like this being offered just to regular people. Yeah,
and I think it's something also that other companies. I mean, not just an MFI, but if you're a company, let's put it this way: there is this whole thought process that we have that everything and all our money must go into institutions that are quote unquote proven or approved by whether it's government or some bigger entity, that it must go there in order for you to have full security. And a lot of small business people now, when they're going to banks and so forth to get a loan, a business loan, can't get the business loan because they don't have the collateral for it. They'll give you a credit card. They'll give you a school loan. But God forbid, they're not giving the money for to start your business or to add into your business. Right. And as a result of that, you'll find that micro business, SMEs, are having a hard time with just getting enough capital to get their business going. They have the drive, they have the intensity, they have the support from family and friends, but they just don't have the most important thing, which is the capital. And banks, which you guys know the history of banks. Banks initially were made to fund the people. Do you know at one point, they call it usury. So if you made interest or made money on money, then it was illegal, and in some countries they would kill you.
And it still is in some countries.
It still is, yeah.
You can't do that. So a country like Jamaica now, where you have all these SMEs who can't find capital and can't find the funding, they should have other options to go to. And if it is that they have funds that they want to invest somewhere, or if they want to be able to borrow a loan from somewhere, the smaller microfinance companies, or even other companies that are not MFIs, should be able to say, okay, hey, if you invest your money with us, we're going to give you this return back. I run a garbage truck company. I do X amount every month. If you give me $10 by the end of the month basis, I can give you back this money. It's just cash flow within the people.
Yeah.
Rather than having to have it run through institutions, which are fine. Institutions are good. The stock exchange, they're great. But I think we should also take our quote unquote put money into our own hands sometimes and just look at other options. Look at your other the small businessman who have a hardware store, right? He has good customer service. He has good product, but man, him can't really expand too far. He needs some capital. Well, why that guy can't go out and ask him neighborhood to invest, and then he gives the dividends to them every 3 months or every month? Why would that be something that is not practiced? And it's not in Jamaica.
You are correct, and it should be, but I suspect it's a side effect of our lower financial literacy.
Well, there's that too. That's a whole.
But it's the same thing to me, is that, and how Jamaicans are, how people are, but I can speak to Jamaica closely, is that we fear anything we don't understand. And because our financial literacy is low, anything that have to do with money, we hear so we either just put it in a bank, or put it in a fixed deposit, or put it under your bed. Me nah put it in another them, something there.
By the way, Randy, I have a bone to pick with you. I realized it's a savings account you have. And when I saw it had a savings account, I was taken aback. Because we know savings account and a mindset of us, and we know about money, what money is. Savings account is something that we should always have a checking account. Just for our mindset alone, Randy.
You should have a checking account.
Because if you think about it, if you have a savings account, right, in a bank, what are you really saying to yourself psychologically? Are you really saving money? No, because...
Well, for me... for me, it's just an account.
It's just an account. But
it's just an account.
I'm always a little bit disappointed when I see folks having a savings account. Why have a savings account? Because at the end of the day, first of all, the bank isn't really giving you anything in the savings per year. It's like 0.001%, right?
0.06 of a percent.
Boy, you're making it even worse now. Right. And on top of that, inflation on average is what, 4.5%. So you're losing 3.5% per annum relatively just to have your money in a savings account, right?
That's
on top of that, the bank is lending that out at fractional reserve lending, 9 times the amount. So there's that too. And then, so I'm saying to myself, not that it makes a huge difference in terms of savings and checking in, but from a mindset standpoint, it says to yourself that, hold on there, the system says that if I have a savings account, it's like I'm not keeping my finger on the pulse of money. And what money really is and what it should be.
Okay.
You know what I'm saying to you? From a psychological standpoint.
But what if that psychology doesn't affect us? I have a savings account. I don't have a checking account. I don't keep any money in the account, really. I just invest all of it. So I make money on all my money. I don't keep money in the savings account. So I just have it. It's just an account.
Thing for me.
So I don't think the psychology affects me, really.
Oh, I'm just teasing you around. I don't feel no way.
No, man. But you touch a good point there. You have to remember,
You actually did. Yes, you did.
A checking account comes with higher fees.
Mm-hmm. A checking account comes with higher fees.
In Jamaica, yeah. So I don't keep any money in the account. The money goes into the account and it goes into the market almost immediately. I don't really keep a lot of money free. Everything goes into the market or into an investment. But if I keep a checking account, the bank charges me because we have a thing in Jamaica where anybody who have a checking account is a business person and they must make money. Only for money, and so we charge a higher fee for no reason at all. So
that's standard from bank to bank? Because I didn't realize that. I think they also charge you for having a savings account. There's also a fee for that. If you go below the balance, they charge you for that.
Yes. Mm-hmm. There are certain fees depending on your bank. So every bank have their own fees. But for me, exactly like what you heard Danhai say, that account is just a place where the money touches and goes immediately to wherever it needs to.
Anyway, I don't want to open up.
My savings
it's a bill pay.
Yeah, cool.
No, man, it's a good point. That's what the podcast is about. We touch all kinds of things like that. That's actually, bank accounts in general are a thing that we'd love to talk about, but to get the right set of people to talk about it. And the truth is, nobody really wants to come and talk about the 0.6%.
Well, we could have a whole podcast, Randy, on banking, one day about banking, what it is, talking about money, definition of money, what money really is. People don't know these things, People think they know what money is and they can't define what money actually is. If you ask somebody today define what money is, they couldn't answer. They're going to say, we just use it as trade and barter and exchange for goods and services. There's an actual real definition for actual money. It's a literal 4-point definition.
We should have had you on the podcast before. So I start off, I do classes. Mm-hmm. I haven't done it in a while, so I know a lot of people are angry here in the setup, but check your email, it's coming. Anyway, I do classes, and the very first thing I start off my classes with is that question: what is the purpose of money? Because I believe it only has one purpose. Okay. And people give you all kind of answers, but to me,
what's the purpose you see money as?
It can only be invested. That's the only thing you can do with it. You can only invest it in things. You can only invest it in a sandwich, invest it in a taxi ride, invest it in
an asset or a liability.
But but it can only ever be spent. That is the point of it. It is a transfer. It is a representation of value, and you only have that value when you're transferring it. If you have the money saved up alone and not doing nothing with it, it don't make no sense.
No, I completely agree with that.
Yeah. Like people that think billionaires have billions of dollars sitting in a bank account, but that wouldn't be that's no use to them.
No, man.
Like, what do they get from $1 billion sitting in a bank account? That's pointless.
No, not at all.
Nothing.
I'm losing on inflation.
It has to do something.
Yeah. One of the biggest things that I try to do every month is to get my account to almost zero. Right? My mission is to get my account to zero. I want to lend out every single dollar because it has to flow. It has to flow. Right. Yeah, you're gonna have an average balance of a decent amount, but at a point you say, I don't want the money. Why am I staring at this figure for? It's not doing anything. It has to go out on the road and put on its muscle and work and bring home back the bacon. And that's what people don't normally see money like that. A lot of times, people also look at money and they, you have to realize now, and you guys will know this already, and your audience probably knows. I hear they're very sophisticated, but also you have to realize that money today isn't backed by anything, There is no gold backing it. The gold standard left years ago since Nixon. So there's no gold standard. There's nothing backing your money but just fiat currency. Where confidence. It's simple confidence. And people need to
confidence.
You are literally putting your life and your freedom and happiness in these big institutions' hands. In America, it's the Federal Reserve. The Federal Reserve. They say, listen, this is what your value going to be today. And then you have to just go and eat that and take it. And so people don't know these basic things about money. They just know to spend it. But they say entrepreneurs must know money, but employees don't need to know what money is because they must get a paycheck. But as an entrepreneur, as we all are, we need to know what money is, how it works, how it flows, what kind of value does it really have. Notice that the value has died off from the beginning. All these currencies go to zero eventually. What do you do with this cash? Buy real estate, buy something solid, buy gold, buy something that's going to pay you back. And people don't really, they're not taught about it. It's not their fault.
Yeah, and that's why the financial literacy is a needed thing, and not the typical financial literacy either. It is a realistic financial literacy. Because you said that people don't know, but we innately know, but we don't know that we don't know. For example, carrying it back to what we said about TransJamaica, that is a very clear example of confidence right there. It is not that there's anything wrong with TransJamaica. TransJamaica is a great company, but right now in the market, everybody's fearful, and I would rather $1 in my pocket than $1 in something else. And as a result of that, we see people not even trying to care what the actual value is. I just want to get it out. And that in itself is an example of actual confidence from the public there.
It's a group mentality too. Group mentality.
And that's what, exactly. And the people who can wait it out and who can pay attention to it and can ride it out are the people who win. Because I can tell you, whoever is buying TransJamaica for $1 today and tomorrow is going to be winning in 3 years. In 5 years, they're going to be winning.
But you see, you have to scale out your risk, though, Randy. You have to scale out to who it is that has these funds. The people who have who are very liquid, they can put money down and scale out and wait until there's the rich people. But then the guy who him don't have that and have $500,000 and he only makes $200,000 a month, he can't wait out. So when you say what you said a while ago, you're really talking to people who have cash flow and who quote unquote are rich. You're not talking to the average guy out there. The average guy there can't afford to sit down and wait 3 years for this thing to do well. Him going cash out.
Well, I'm actually talking to that guy or girl, but I am saying to them that what you need to do is to have this conversation with yourself before you put the money in. So you need to be able to say to yourself, hey, if this thing goes south, am I able to sit down and wait 3 to 6 months? Am I willing to wait a year or two for it to recover? Or can I not do it? That was the thinking behind, well, you wouldn't know, but we Danhai and I talk about it. The Cygnus story. Cygnus had an IPO, and I thought at the time that it was a little too rich for my blood. But it was good as a company, just a little too rich for my blood there. And so I didn't put my money in at IPO. And after it sank later on is when I got in. And it ended up being a great experience for me later on, to the point now where it's worth much, 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 much more than it was at the time. Even after the sink, it's still worth more. But I had to have that conversation with myself, because at that time I couldn't put the money down and have it wait a year and a half. So I didn't touch it. You get me? And other people who could touch it, and they went into the dip. And if you are fine in the dip, that's fine. And if you're the worst you want to be is in a bad situation that you haven't thought out ahead of time.
Definitely.
And so that's why we try to push shows like this. That's why we try to push the information.
The education,
classes.
You guys are doing you guys are doing a really great service here, man. Really, really, really good. Need more and more podcasts like this.
Thank you, and we'll have to say the same to you, because
thank you, sir.
You're pushing a product that a lot of people would be afraid to do now. But you are.
Shockingly, people don't seem to be fearful. We put an ad out on Instagram, just barely, and we have on average 50, 60 people every couple of hours asking questions. How do I invest? How do I do this? We've done pretty well. To be honest with you, the fear that you think is there, I'm not saying this is not just right, it is there. But it's not as bad as I thought it was. I thought it would take a while or whatever the case is, but doesn't seem. But we have a name to, It's not like we just popped up yesterday. Sprint has been on for 9 years. So there's a certain...
You're the party guys.
Yeah, there's credit. Listen, that's maybe 25% of our portfolio. The rest of it is regular. Yeah, well, 22.5%. So yeah,
wow.
That is a. But remember, it's not just party loans, and a party we call it recreational loans now. The party thing was because was in the beginning. We give out loans also for costumes for carnival. That increases on a yearly basis. We give out loans. Somebody wants to go to Miami for the weekend with them spouse and hang out. We do that also. Like pop loans,
Yeah.
Quick say, hey, I want to go to Florida for the weekend. I don't really have the cash right now. I'm not getting, and we'll give time to pay back in maybe 3, 4, 5, 6 months. There's a market for that.
There is.
Yeah, people don't know that.
And a growing market.
If you have 22%, yeah.
Growing.
Listen, life short, What we must do? We have this money we work so hard for. If I don't have the cash on me right now, I'm not saying you should be irresponsible. Everybody weighs their pros and their cons, what makes them happy. But if you want to borrow $500,000 or $300,000 because, hey, I've been working all year. I don't have the cash right now, but I'm going to go insane if I don't have a little vacation. And you want to go to Rock House for the weekend or for 3 days. Mm-hmm. And you want to come borrow the money and you can pay it back in 3, 4 months, 6 months. So you don't have this long 5-year with a credit card that you pay minimum payment and you never finish the payment on the card. Why not do it? And people are always like kind of saying, boy, that's so irresponsible. When you have a credit card, most people, where banks make a lot of their money, probably 40% of their total income is on credit cards,
a lot of banks.
Not for you paying what you borrowed, what you spent last month on the credit card. The minimum payments, they want you to pay minimum payments so they can keep you in debt until you're old and gray.
Yep.
Right? Mm-hmm. Rather than get a quick loan, pay it off in 6 months, you're good to go. You don't have that debt for how long. But then it's so funny how the human being thinks, we're going to look and say, boy, okay, big banks, they're okay, but the small guy giving a party loan or a recreational, all of a sudden, it's immoral or irresponsible. I don't get it.
But to be honest, anybody that's talking about that, they don't really understand what debt is. So if they're talking, boy, they take a loan for a party, they don't really understand. Boy, the debt. Many times it actually makes more sense than spending all your money one time. Because if I can borrow from you, spend that money I borrowed, and then over time I pay it back, and I have my other money that coming in. So say take out 10% of my pay to pay it back every month, right? The other money I have, I can go and invest. I can actually buy what I actually need. So the loan many times make more sense than actually just spend the money at one time.
Exactly.
But people don't really get that. That's a financial history point, yeah.
Yeah, man. You can bring it to real talk, right? Yeah, so I say in this situation, consider this. I was using some girls before. Thankfully, the internet saved me from getting in trouble. So let me say that there's one young lady out there, and she wants to go to Carnival, right? And she save up her 100,000 to buy her frontline costume. She could instead in January, so she have her money from last year in January. She could instead invest that money in. And again, guys, this is not advice. It's just me being me and thinking about how I would do it. That person could put their money into the stock market, into a stock that they like. Let's say they think something's going to be great in 3 months. Let's say they like Pulse at the time, because Pulse has given a lot of gains over the last 3 weeks. They put their money in Pulse instead and go to Sprint and borrow and pay for the frontline costume. So I have the 100,000 in hand now, but instead I put the 100,000 in stocks and I go to Sprint and I borrow 100,000 from them and I go and buy my costume. Now the 100,000 from Sprint come with some interest on it. Maybe come with let's say 10%. So I'm really going to have to pay back 110,000. Right. But what I'm banking on is that my stocks in those next 3 months
is going to rise above that.
Is going to give me more than that amount, right? And I'm going to be able to pay it. Or I can pay a little out of my paycheck also. So I'm cutting my cost there. And even if the stocks go down, I don't have to worry that I'm losing everything. You're only losing whatever the percentage difference is. No. it is a matter again of understanding risk and splitting your risk. Is that riskier than just going and paying upfront? Yes. Should you talk to your financial advisor before that? Definitely. But in my book, at least, is that better than taking 100 grand and buying something straight up?
Yeah.
Definitely.
At least you have a investment portion to what you're doing. Yeah, I hear you.
Exactly. And I keep my cash to myself.
Yes, exactly. Makes sense. But most people would not be thinking that way.
Yeah, that's right. And in fact, most people might get advised against that sort of thing, but we have to change that sort of thinking because nobody has ever gotten rich without borrowing money.
Well,
nobody has ever gotten wealthy without using other people's money, I should say.
That's a good segue into debt. You know, people think debt is a bad thing, but debt is dependent on, is it bringing in money or are you putting out money? And a lot of people don't realize that we live in a debt economy. The whole society is built on debt, which is really sad to say, It's very, very sad to say, but that's what it is. I mean, if you think if all debt was paid tomorrow from every country, the whole world will go into chaos. It will go into chaos. So it's built on debt. Unfortunately, banks own debt, right? But that's the big heap of whatever it is you want to call it that we've built over the last 100 years or whatever. But it's all debt. It's a matter of how are you using this debt to your advantage,
That's correct. In fact, I never say it's a bad thing. It's a good thing because the major problem in Jamaica hasn't been debt. It's been lack of access to debt.
Mm-hmm.
Yeah, credit is what really boosts an economy. Mm-hmm. Ray Dalio said it all the time, that credit is the real lifeblood of any economy.
Well,
I have this thing I say, a dollar in your hand is a dollar. But a dollar on credit is much more than a dollar. A dollar in your hand is $1, but a dollar on credit is $1 in your hand, plus it's the interest that you're going to have to pay back where you borrowed it from, plus it's the insurance on top of that, so now it's an insurance payment there, plus it's whoever is tracking the actual payments that you need to do to pay back that dollar. So a dollar on credit is much more powerful than just a single dollar by itself.
No.
Yeah, so we should not credit, but we should know that we need to manage it carefully and be sensible with it.
That's true. I do hear your point on that, the debt for having the $1 and also having a debt of $1, because then I guess you can use the debt. But I think at a starting point, debt definitely is, in my opinion, is not good for any economy, any economy at all, because the simple fact, you're living on a mountain of debt. I mean, you guys have heard of deficit spending in the United States, where you just print more cash. For example, the perfect example, this corona situation that's happening. The U.S. now has to come up with $1 trillion or $2 trillion worth of cash to bail out small business, medium-sized business, and so forth. Where is that cash coming from? It's not borrowed cash, It's cash that is being magically appeared out of nowhere. It's what you call deficit spending, except it's going to be used to bail out people. But like in any economics, as you guys know, if there's any too much of one thing, what happens? The value decreases. So if you keep on pumping cash into the economy, right, and pumping, what are you doing? You're lowering the value of the cash. And eventually, you're going to put your dollar to a point where nobody wants your money anymore. So I don't necessarily think, I hear what you're saying, Randy, in terms of debt. And I think in certain nuances, yes, it can make sense. But when you're going to a point where your debt is occurring not through actual hardware and work and value, but just being pumped out there as cash, right? That is where you're building a quicksand economy. And that's why I said to you earlier in this conversation that every dollar goes to zero. That is not backed by gold. Because at the end of the day, you're just building it on pure debt. And eventually, look at the US dollar, for example, right? The US dollar, I think, since 1940 something till now has lost 99% of its buying power coming down. It's just dropped. Remember,
still a reserve currency in the world.
Yeah, but that is even not really the point. It doesn't matter if it's the strongest currency.
No, that's a huge point.
No. It is for now. It is for now, and but that's just today. But the what I'm saying, the chickens are gonna come home to roost sometimes. All this debt that America has exported to other countries like in China and so forth, so on. Right? We give them US dollars cash and they give us the hardware. which is the cars and the weave and whatever the case is. Eventually, the more money that we keep on pumping, weave, that America keeps on pumping into the economy, deficit spending, corona, $1.2 trillion coming out of nowhere. What's going to happen to the US dollar? It's going to lose value. Do you know in Africa, in certain countries, it is almost illegal to use the US dollar? It's illegal because of the simple fact that it really has no real value. The only value it has is a debt value, but it's not going to last. I'm not trying to create an fear, but nothing can survive, and nothing. The thing is backed by nothing. It's backed by nothing. There's nothing back in the US dollar, you know. There's no gold.
It is backed by the full force of the federal system. The confidence of the federal system.
So you feel good about that?
I do, because what else am I going to feel good about gold? Gold is only pricey. Gold is only good because we decided that we wanted it to be good enough. We also decided we wanted diamonds to be worth what they're worth.
Completely what you're saying. Completely, Randy.
Right. Check the price of gold.
No. You can't check the price of gold because clearly the powers that be are going to try to reduce it as an asset class. So basically, you can't do and say, the price of gold.
No, what I mean. But Chris, what was the utility of gold? What actual value did gold have in those times?
Well, the reason why gold had value because it did a lot of things, man. Gold had a value because of the simple fact that,
like what?
Well, it is something that you can't create out of nothing, right? You had to literally dig it out of the ground, or a star had to blow up and it drop to Earth 1 million years ago. You had to find it. You can't produce it just because you want it. You can't print it, right? And anything that is in short supply is going to have value. That's just the way it is. It's going to have value. That's why gold was used.
All right, so
and it's also a good means of to conduct electricity. If you want to use that as it, but gold just had a value.
As I said, at that time, it's not using gold like that. It's not like gold has utility.
Go ahead.
So when did we start conducting electricity with gold?
No. I'm just asking what it's used for. I just threw something out, but that is indeed fact.
No. I said no.
No, it's not used.
Yeah, man. But at the time when gold was used.
No, it's not used in any mass way for electricity. I'm not saying that, but anything that is a precious metal that has. All right, let me ask you this. Would you rather have $1,000 in cash today, or a piece of gold that has the same value as $1,000 in cash? Which one would you rather, the piece of gold or the $1,000 in cash?
Do I have the gold in front of me, or do I have like?
Yes, it's sitting. No, both of them are sitting right.
I might take the cash because it depends on the kind of it, because I can trade the cash, so I can actually make money out of the cash versus.
No, man, no.
If I sell in the gold in $1,000, I wait until it revalues higher.
No, man. You see, again, you're valuing gold based on what the powers that be want to value it as. But gold has beaten the dollar in every country by a mile in terms of its value.
I agree, but guess what I'm doing? I'm not keeping the dollar to keep the dollar. I'm taking the dollar to trade it so I can actually do something with it and make some money out of the dollar. But you can trade the gold. You can trade the gold.
We have to find somebody else who won't buy it.
If I take the gold today for more than $1,000.
Yes.
If I take $1,000 worth of gold,
if you take the gold, the gold will be worth more in a year than that.
People who had gold last year have not found
if
that.
If I take $1,000,
they have lost a lot of value.
But what kind of Chris?
Sorry.
Gold
guys.
Gold has not lost. If you put gold beside the dollar, the US dollar, and a graph, and tell which one has lost more value in the last 50 years, you tell me which one has lost more value. I guarantee it's not.
Fine, Chris. Well,
gold has always maintained.
What I'm saying, if I take the $1,000 versus for $1,000 worth of gold and I have $1,000 cash, if I take the $1,000 and I lend it out over and over and over and make some money with it, I can probably beat the return on the gold in a year, right? By actually using that $1,000.
First of all, if you do that, you're not taking a risk with that investment every time you're doing that. So you're hoping that everything that you invest in is going to pay off. But I'm saying to you,
you're asking what I'm fine with. So you're asking which one I would prefer, the gold or the thing that. So
also you're holding
the value. If I'm holding the cash versus holding the gold, then sure, give me the gold, because $1,000 cash in my hand, that over 50 years, and I have to trade it out, then I have $1,000 in 50 years. If I have the gold now, then I want to say some event comes and I need to trade out the gold now. I can sell the gold for more than $1,000. I make money on it. Cool. But what I'm actually doing the $1,000 versus what I'm doing the gold right now. If I don't have to hold it, then I'm taking the 1,000.
You're talking today. You're talking today in terms of you want to eat a piece of bread and
if I want to,
and patty, you want the $1,000 right now.
Yes, or actually want me.
But as an investor. You should want.
If I'm an investor, I have $1,000 and say I can beat. If I think I can beat the return on the gold in an X period of time, then I just put the money in whatever can beat the return of gold, right?
Yeah. I don't think you would be able to beat that return, even though gold has fluctuated. But gold has only fluctuated because of the confidence of the market and the confidence of the people who are trying to lower it as an asset class. They don't want you to go back to the gold standard. They want you to use their dollar and their debt. But all you're doing, what you're doing every time we are out there, we think we're making all this money. I mean, I don't want it to be long-winded, but let us define money just as a definition of money, right? The money, number one, has to be fungible, as we know, right? $1 in my pocket is similar value in your pocket. $1, it has to be portable, if we carry it, right? It has to be fungible also, and it has to hold its value over a long period of time. By those definitions, we don't have money in our pockets now because the first three things do match, but the last thing doesn't match, which is holding a value over a long period of time. And by long period, I don't mean 2 weeks or a month, and I'm talking about a good 20, 40, 50 years. So we don't carry money in our pockets. What we carry is currency, the current value of what it is due today. So when it is you are basing your freedom and your happiness and your wealth based on the value of fiat currency, which is what we are using today, right? Money given by value given by decree. If that is the case, then you want to say that you're living in debt by debt, then you're not living in a safe economy. This economy is not a safe economy, you know. We think that it is not at all safe because everything that we have is based on debt and on fiat currency that has no real value, that is only be given value based on the people in these high positions who says, yeah, this is what you can buy today with it. That has no real value. And I think people need to realize that, and if they really look into it, they'll see it. A different conversation.
No, man, we're not pressed for time, but I like where you're going with this, and we need to have maybe an economic episode that will bring you back on and bring out a couple of economists here, yeah. Mm-hmm. But it's like I did not expect this twist at all. The gold standard is Wizard of Oz. Wow. So wait, hold on, Chris. Tell me something. You have actually a gold bar for yourself? No, I know some people do it.
That's serious. Yeah, man, you have people like that.
No, I mean, there are certain precious metals that I actually share with my brother in the States and big money, but yeah, gold. Yeah, in hardware, in precious metals, not in paper. You guys can invest in paper and all that if you like. I don't think for the long term, when it really, what hits the fan, you're gonna want the dollar is not gonna do anything. If the US dollar tanks tomorrow, what happens to Jamaica? If everything tanks, when China starts selling back all of the US dollars and then America is now flooded with all this fiat currency and the value goes to zero, what's going to happen?
We'll start using the renminbi. You can't beat human confidence. Not get you. You're right. But we really do need to have another episode this one. But I like that you're thinking. I like that you're thinking differently. I like that you think different, and I see where it has contributed to the rise of this company that you have and the innovative thinking that you have. That's what I like. I like ideas that aren't my own. I can go back and forth with them. I'm actually enjoying that. So, I mean, I will wrap this one though because I don't want to have people too long. So thank you very much, Chris. I'll say it again for them and you can plug your products. Sprint Wealth is an amazing product. Guys, check the show notes. You'll see a link to it. If you call and you want the loan, call them and tell them so you heard it on Earnings Season.
632-4189. That's the office number. You can 632-4189, and the more direct line to one of our wealth agents is 221-9567. That's 221-9567. And our Sprint Financial IG is Sprint Financial.
All right, guys. I mean, look at it.
So
think about it. Think about the returns on it, and I personally see it as I see it having a place in a well diversified portfolio. Actually, if it can bring you the returns and it has track record, ask your financial advisor about it and consider it. I mean, I can tell you this: somebody who is getting the payout this month is going to be a lot happier than somebody who owns the wrong stock this month.
Yep, indeed.
Yeah. Definitely, I welcome anyone to come in and again ask us. We can discuss it with you. We're very transparent and give it some thought. It's an option for you. It's an option to get real steady flat rate ROI on your money. And we want to help you, man. We want everybody to have passive income. We want everybody to be able to not just, sit down and do your 9 to 5. You got to go out there and make cash. The world is getting tough. It's getting hard. Making money is not easy, right? You're exchanging time for cash. Don't always do that. You want to get passive income coming into your bank account. You want to sit down and just have that money while you're sleeping coming in. To do that, sometimes you take a little bit calculated risk. I don't see it as a risk from what we're offering, but, take a chance. Let me just plug one more thing. The email address is sprintfin. That's sprintfinwealth@gmail.com. So sprintfinwealth@gmail.com. That's the email address also.
Perfect. And it's in the show notes, guys. So check the show notes right now and you will see it.
Yeah. Alrighty.
All right. Thank you so much, Chris, for coming with us. But I don't want us to wrap just yet. There's one thing that we do for everybody. We call the Earnings Season Gauntlet. It's a little thing where we just want to show that the market is for everybody, no matter what level of expertise or experience you have. So with the knowledge that you have right now in the market and understanding where we are with coronavirus and all these other things, looking at the market right now, and you have to pick something on the market, sir. Pick 2 stocks that you would hold for, that you would hold for the next year. A year? How that sound?
Yeah, a year is good.
The next year, you said?
Yeah, the next year, yeah.
You put me on the spot.
That's the point.
I was looking at, well, you said they were down. I'm more on the junior stock exchange now. You're talking about
anything. Because we're heavily
main or junior, doesn't matter.
Main, junior.
I'm saying the transit, the highway.
And of course, the real question is the why. Go ahead.
The why? Well, because clearly it is not because everybody's jumping on the bandwagon, but I don't see something like that is transportation that is going from east to west. Whenever there's convenience given to humans, it's probably going to do well. And I would bet my money because it's going to be very convenient just to get back and forth between east and west on that highway. It's not an educated response necessarily. I'm very organic, and that's why I think it will do well over time. Granted, there are probably going to be some hiccups that it's going to have, but I think in the long term it's going to be a good investment.
Over a year, I agree with you, and do remember that it also is projected to have nice enough dividends.
Yes.
But I can understand where you might not pay attention to a dividend because, I mean, an okay dividend is 1%, 1.5% is a great dividend. But you're giving people that every month.
Yeah, exactly. I really invest in my own company, to be honest with you. But, that's what I would think. I think Lasco also. Anything.
Which one? There's Lasco Financial Service. Okay. And why do you like
because again, they're providing tangibles that they have a long-standing name, in Jamaica, and people are always seem to be using their products. I don't see it. I've never seen a case where their products have never always been utilized by the Jamaican people. So I think it will always be stable and do well. Barring some of the raw materials that they use simply not being produced anymore. But barring that, I think they'll do well. And you're asking me this right off. In a surprise ask. So I'm just jumping on what coming to mind.
No, that's fine. That's fine. That's the point of it. Yeah, the point of it is to show people that even if you're not in the market, you can almost at any given time at least pick one or two things out of the market that you know something about, and it's very easy to go and just do the extra research to find out more.
Yes.
Yeah, you can dig a little deeper. So I like. I think just
I'm pretty sure you know a whole lot more about this than I do.
I do, but I'm still not an advisor, sir. Yeah. But I think what you're looking for is actually Lasco Manufacturing, because they actually make things. But Lasco Distributors
distributes them.
Whatever they do, yeah. But that's good because that's a buffer. It means that Lasco Distributors will almost always take a little bit more of whatever it is that Lasco Manufacturing makes. So Lasco Manufacturing has almost a guaranteed customer, from my point of view.
Yeah, well, that actually makes sense.
Yeah, so it means that even if something goes wrong, you will see it affect Lasco Distributors before it hits Lasco Manufacturing.
Yes, exactly.
Yeah. And so you can adjust based on that.
Exactly.
But thank you again.
Yeah, man.
So Christopher Barrett from Sprint Financial Services.
Pleasure, sir.
And thank you for being here with us. We're definitely going to have you come back and tell us more about this gold standard.
Okay.
Definitely.
All right, Randy. Nice. A pleasure, man. You guys take care and stay safe.
No problem.
Same
Thank
to
you,
you,
Chris. This has been Earnings Season. I'm Randy. On Twitter, I'm at RTRaw.
Fuck, you remember his name this time. And I'm Danhai at Danhai on Twitter.
And this has been Earnings Season. Hope you guys enjoyed it. There we go. Look out for another one with hopefully less delay. Bye, guys.
Hey, guys. Bless up.
Whatever you do right now, don't you stop.
Earnings Season, bro.